Tesla. What an amazing post earnings. Just blew it out of the water, beyond expectations of a lot of analysts and just shareholders in general, just wondering if Elon has been a little bit distracted. So I want to go over that today and just share that Tesla has still lifted up the market. And surprisingly, a lot of these earnings have been coming in and just saving the day. Because if you've noticed, or maybe haven't noticed, which I'll go over in just a second, that a lot of our data reports we had today, existing home sales, that just was not good, right? So we want to make sure that we're not overshadowing what's behind the scenes with a lot of these data reports, how our economy is actually doing with some of these companies that are just spearheading this market forward even higher. All right, trade the trend, follow the trend, don't fight the trend, but always make sure that you're hedging your portfolio and making sure that you're keeping, as I like to say, your head on a swivel, okay? So all that being said, my name is Dr. B. I'm a holistic life business coach and strategist for entrepreneurs and thought leaders. I'm also an investor and options trader. I have been an entrepreneur for the past 8 years, former pharmacist, undergrad in chemistry. So I matriculated through this journey of building businesses primarily in the coaching consulting space, right? Well, maybe it makes sense if y'all maybe think I'm a professor or educator the way that I speak, but I built also some Turo and some Airbnb businesses, have a credit solutions company as well. But all that information you can check down below. You didn't come here for introduction of me. You came here for the value. So let's jump right into it today and make sure that we get out of here quick, swiftly with the right information. All right. So we have our fear and greed index that was at extreme greed towards the beginning of the week at 77. And we got knocked down from 77 back to about 70 this morning. And from 70, we went all the way back down to 62. So like I said before, for my beginners out there, this is an easy way to understand which direction our market is going, if it's still in a healthy state, or have we crashed officially and pulled heavily back about 4 to 5% plus, and we're back down in the fear range, which creates extreme buying opportunities potentially for specific stocks and specific sectors. Okay, so just wanted to cover that. The next thing is understanding that our treasury bonds, okay, our treasury bonds are just coming into a stance here where it's just not where it needs to be. And you can see here that there's concerns, right, with our national debt. And our national debt is at extreme highs at about $35.7 trillion. Okay, and let's go into that really quick. So if you've never seen this, there's your 35.7 trillion. And you can see this U.S. debt to GDP ratio here. We've got 52, 34, 55 from 1960, 1980, and 2000 respectively. Now we're sitting at 122% from a debt to GDP ratio. That you don't have to be a mathematician to understand that that is very, very concerning. Okay. Now, what happened in 2000 leading into the dot-com bubble? Many of us, some of us remember, some of us were a little bit too young, some of us were right in the thick of it, right? So 2001 to 2003, it led to a post-recession pullback from 2001 to 2003. And then we boomed from there coming into, again, yet another 07, 08 into 09 situation. So is this not adding up to a little bit of concern, right? Not injecting fear or conspiracy into the market, but making sure you are being aware that you're not having a mask being put over you by our government in the U.S. just saying everything is great, when in reality, it may not be, okay? So you want to position yourself on the right side of how you can become a part of the upside or the downside. So if we go into a quote unquote recession, or we go into a situation where there's that black swan event, we're all prepared to be able to play puts on the way down. You have an inverse index of whatever you have in your long-term portfolios. And other than that, we just ride the wave, right? Even if you hold all the way through it, you've held through other pandemics and other situations and other things, and you just buy the dip, keep buying the dip, okay? So not financial advice as a disclaimer on this video. This is just informational purposes only, but hopefully you can value the information that's being given, this historical in context, all right? So we've gone over the treasury yields. We've gone over existing home sales. Now let's go over the big news today, which was Tesla, okay? Tesla after hours, everyone was looming over how Tesla was going to report. It's going to send us lower with all this data that's reporting negatively. or is it going to hold us up continuously? And it held strong, almost up 14% after hours, from 212 at the close of the day into 240 into after hours. So you're talking about roughly a $30 point move after hours, which was astronomical. Now, the big key thing tomorrow, if you're looking to trade Tesla, is being very mindful that you don't jump the gun too soon. So if you're already in and you played a lotto play, meaning for those beginners, again, that means just a strategic contract in one direction or the other, right, before earnings. So earnings can go either direction, and you've strategically entered that with proper risk, and you can have a massive reward. Okay. So if you entered a call option on Tesla before market close today, you should open up pretty positive. Okay. So you want to make sure you lock that in. Not, again, telling you what to do, but just be mindful of making sure you lock those gains in if you did do that. Okay. We also have IBM. Not going to go too deep into that, but IBM was at all-time highs. It fell 3%, which makes sense. Just kind of fell back a little bit from some lackluster reports there. We've got also Lam Research, which most people aren't familiar with. Lam Research is in the semiconductor sector, so you want to make sure that you're watching that. There was also some positive NVIDIA news that just posted this evening. If you're watching this late or early in the morning, you want to be mindful of. And then we've also got Molina Healthcare, just paying attention to different sectors. That's really good for the managed care healthcare sector, that it had a 10% surge after their quarterly report. Peloton, please pay attention right now to a lot of these pandemic stocks that got absolutely beat to the ground. The Zooms, the Pelotons, they're starting to pick up some steam, as well as mRNA, that potentially could send some signals about maybe also what be coming with that Black Swan event in the next year or so. All right. But until then, we're only focused on the now, because that's all we can do. So let me jump into the charts. And as promised, or if I didn't promise at the beginning of the video, I want to share with you what I was looking at today and making sure that you can mitigate your risk, and also how to handle potential losses in the stock market. Everyone's going to take a loss at some point in time, but trading more specifically, and also long-term investing, is about making sure you keep your gains, making sure you manage your downside or your risk, and you stay in the game. Okay. So here's how we looked at the market today. All right. So I have SPY up here, and I have this level of 580 marked from this morning. Okay. So if I put this up here, if I get rid of that and I put this up here, this was the support range that we needed to hold this morning. Okay. So for the past couple of days, we've been bouncing at 580, holding up higher lows, forming a lower high here, but bouncing still. And then this morning, I was looking for one final bounce. Okay. One final bounce. And I want to show you on a 15-minute what that was looking like. So today we came in, we gapped down. So there was a gap right here in the stock, right back up to 583. Now look what happened yesterday. Okay. We gapped down and then we rose back up. Now, for any of my savvy investors, I get it, right? You could have seen the downside. Yes, the downside was massive, but we're still technically in a bull market. And today maybe have, jumped the gun slightly, but here's what I saw personally. Existing home sales had already reported, and the market maybe hadn't factored in it yet. Again, I'm on the West Coast here. So you see right here that at 7, right there, that's when the data released, and it fell right into this support. We picked up call options at this support for SPY, right, in the money call options, and we were riding it up, and we were in positive, almost a bottom tick entry. Okay. We were riding this, trying to ride it to that point right there, which was roughly about pre-market high, anywhere in the 583 level. Okay. About nice 15, 20, 30% trade in and out. Okay. But then the market began to price in, and there was some other factors. NVIDIA was slightly weak. Meta was really weak today, right? There was another factor that it didn't maybe react or price it in yet, and it just got slammed out of nowhere right there when I was about to, exit and profit. So my whole point in saying this is that if you desire to trade, if you maybe have been burned in the past or whatever it is, it happens to any and every trader, investor, whatever it is that they decide to call themselves. You are going to have a trade plan. Your trade plan is going to start playing out. but you also have to mitigate the downside if that trade plan breaks down. So today I was positive and I don't want to take personally, my rule of thumb is taking percentages at 15% minimum. So when I saw 5%, I was like, I'm not taking that just yet. I'm going to ride it out. I was already in light size. And there you go. Got slammed back down. I told my community, right? We can see here inside of Leverage University. Again, if you didn't know, we had a Discord. Here's our Discord. I go into option signals, right? And there it was. I was in starters, so I was not in heavy size. Stop loss below 580. So we were just looking for a small scalp to the upside to fill that gap. Stop loss below 580. So again, just to show you guys and ladies that inside of our community, we do have stop losses. We don't just throw things out there and hope that it works. Okay, so there was my stop loss below 580. If it breaks below 580, I'm out. And then if you wanted to or you desire to, if we were watching it, you could have flipped short with a reject underneath 580 to take it lower, right? And that worked beautifully. Did I take that trade? No. What I did personally, and a lot of my community members did, we just waited for this, just stepped out of the way, just stepped out of the way. And after that trade idea failed, I wanted to recoup and knew that we were pushing into another support macro demand zone area, okay, which was at 574 and some change, 575, which is 5,800 on SPX, okay? So that is a big psychological level. And once I saw buyers step back in right there on that 30-minute confirmation candle, we had community members get 100 to 200% on not only SPY, but Apple, some Amazon. They took it up and squeezed up off of that 227. Okay. So nice recovery here from here to here on Apple was a nice close to 30+% trade. You can see that I put the levels inside of our community, right? SPY 575, QQQ 486. Amazon 183, so on and so forth. So those were all the macro demand support areas for the major Magnificent Seven companies that many people trade that have been strong. All right. So I wanted to signal those because it gave them a really good opportunity and our community opportunity to play nice bounce opportunities, bounce trades, call trades off of that macro demand support. All right. If none of that made sense to my beginners out there, please go watch the beginner video. If you're advanced or you're in my community and you're a client of mine in my mentorship, you get it. I just wanted to make this video because I wanted to make sure that everyone is still on a riding high, learning, wanting to make money, wanting to understand how this skill set works. This is a skill set for a lifetime. This will never leave you. The stock market changes each and every day, each and every quarter, each and every week, each and every year is something new to learn and to make money and to make sure that you're building those assets that you desire to have. All right. Do not give up. Do not get frustrated as much as possible. Work on this. Okay. Work on this. Plan your trades, mitigate your risks, step back in the next day or the next week, take a week off and come back stronger than ever. All right. Just want to throw this out there. Thank you all so much. If you're new to the channel, please give me a like and subscribe below. I would really appreciate it. There's also our Discord link down below. I have my podcast as well. If you need help with a little bit of the mental bandwidth, mental strength, my life coaching side comes out on my podcast called Leverage Talk. Other than that, if you got any questions for me, if you agree how Tesla responded, or maybe you won today and say, hey, I took this trade, I took that trade, please let me know down below. If you're a complete beginner, say, hey, I'm new, I need to learn. Can you make a video about this? Go check out the other videos. All right. Peace, love, and blessings to you. I will see you all in the next one.